Hello viewers, and welcome to my channel, Sensor 360 Investor. Please read the disclaimer. Today's video, we're going to focus on the equities segment. So we're going to kick that off and I'll create a separate playlist for that. Today's video is going to talk about 6 key factors for growth stocks that, irrespective of whatever system you follow currently or may end up researching in the future, all growth stock systems basically distill down to a number of key factors. And I'm going to give you those here today. In an upcoming video, I'll show you how you can screen for these using a free tool on the web. So I'll leave that for another day. But let's take a look at these 6 factors. And like I said, these will be present in any quality growth stock system that you take a look at. So the first of these is a revenue, and revenue is basically, what the company brings in by selling their products and services. That's their sales. And then the next one is margins, and there's several different types of margins: gross margins, net margins, operating margins. You need to understand all of them and how the company is doing in terms of maximizing their margin, which is effectively their efficiency, and how much of their revenue they're able to convert into earnings. And so the third area is earnings and cash. You need to look at both of those because the company in its early stages may be fast growing and reinvesting all of the earnings back into the company. So they may be showing rapid sales improvements, but the earnings may show negative. So therefore, you need to take a look at the cash situation. As long as they're not a cash burner, you can take a look at that high growth company. But if they are a cash burner and negative earnings, then you have a high risk stock on your hands. Next item is ROIC. Now, many screeners won't give you ROIC to screen on, but they will give you return on equity, ROE. And ROIC, if you can get it, is a better metric, but in the absence of it, ROE is a good secondary substitute. Then we have the industry and sector. For any growth stock or momentum stock, the industry and sector can be up to 50% of the final move. So you want to be in a fast-moving industry within a leading sector. And the final one is institutional interest, since it does take big money to move stocks and the stock prices, especially as the price and the capitalization goes up. And you definitely want to see this stock that you're looking at has some level of institutional interest in it. So these are the 6 factors that you want to look for when evaluating whether a growth stock is of interest for you. Now, some of the factors you cannot really screen for, so it does behoove you to then go deeper and take a look at the key financial statements, and these are the income statement, balance sheet, and the cash statement. Income statement is, as the name describes, it really is the P&L. It shows you for a given period how much money came in, what the expenses were, and what was left after the direct and indirect selling and other costs. The balance sheet, it shows you a snapshot in time and basically shows you what is owned by the assets that we have. And that could be plant, machinery, work in process, goods, working capital, and what is owed. So that's all the liabilities. And so basically that equation always balances. And then finally, you have the cash statement. The cash statement shows you how the money was used, and you want to see year-over-year incremental growth in cash, especially in free cash flow, depending on the type of business you're in, allowing for investments in plant, property, and equipment. So you do want to familiarize yourself with this second level analysis when you're looking at stocks as well. So next up is price follows this little waterfall cascade. So let me bring it all up first. So price basically follows earnings, and earnings kind of follow profits, and profits follows revenue. And revenue is dependent on the business model and the industry within which the business operates. So that's the competitive advantage. So some of the analysis that usually takes place is the industry itself, industry analysis. It looks at things like the TAM, which is the total addressable market, how big is the market, and then what is this company's share of it versus the competition's share, and what's the likelihood of capturing a larger market share. And quite often also want to look at the penetration of how much the industry is saturated, whether it's early growth or it's a fully mature industry. So that you will have to dig deeper and look into the company's financial statements, their 10K annual reports, and industry analysis. Okay, so that is an introduction to the key factors that exist in any growth stock investing analysis or criteria that you need to look at to identify top-notch stocks to potentially invest in. As I said, I will do a video on and show you a free screener on the web and give you some parameters to key in and how you can build your own list, so you don't have to pay thousands of dollars every year to someone selling a newsletter when you can do it all for free yourself. And that will be an upcoming video. Thanks for listening, and I'll see you on the next one. Thanks. Bye-bye.